Hey, what's up guys, John here. We live in a clown world. What are the odds that yesterday morning you have South Korea, Taiwan, Japan, and America see their worst days, in some cases ever, other cases 1987, 2008.
The Japanese market has had its biggest one-day slump in yen terms ever.
Nikkei index saw its worst day since 1987.
The Dow had the biggest loss in American history yesterday.
The Dow Jones dropping more than 1,000 points, worst day in 2 years.
And then within 6 hours, 8 hours, 10 hours, everything is rebounding, everything is fine, right? Everything is good.
The tide is turning here in the U.S. and globally.
In Japan right now, we are seeing a sharp rebound following the historic falls on Monday.
Meanwhile, during that period, all of these countries halted trading. You were not able to buy and sell, right? This entire fabricated economy is a joke. We're walking into something that I believe is extremely concerning, that we need to really pay close attention to, so we all don't get rug pulled. Because I think a very big event is going to be coming, and it's on the horizon. I believe that Warren Buffett and Intel and these large corporations, they know about it, and they're positioning themselves accordingly. I'm going to show you exactly what they're doing, exactly what these companies are doing, and exactly what you should be doing to help yourself not get rug pulled. Please hit the like button. When you hit the like button, YouTube will share the content, educate more people about what's really going on in our global economy. If you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in a credit report, go to GreatCreditFast.com, click the link in the description just below this video, schedule a free call for tomorrow, and check out our reviews on Trustpilot. Take a look at this. So yesterday in Japan, you saw the market just absolutely crash. And then they said a circuit breaker triggered, and a stock index circuit breaker is a mechanism used in stock markets to temporarily halt trading when an index experiences a significant drop in value. The purpose of the system is to prevent panic selling and allow time for investors to process information and make rational decisions. Look, if people want to panic sell or panic buy, they should be able to, right? In a free economy, in a free stock market, they should be able to do that. In Japan, that was stopped. And they say Japan's share benchmark soared nearly 11% a day after massive sell-offs that shook Wall Street. Then you look at the Dow. The Dow dropped 1,000 points in a day, right? Then, coincidentally, you had Schwab, Fidelity, you had TD, you had Vanguard, you had all of these trading platforms halt your ability to buy and sell. They all had their own reasons, their own, outages. What are the odds of that? Right? Then, out of nowhere, S&P up 1.4%, NASDAQ up 1.8%, Dow up 1%, right? Then South Korea. South Korea saw a massive crash, right? It was the worst since the late 2008, and they said that stock sell-off prompts brief trading curb. Same situation, right? Same situation. And their stocks plunged 8%, but then it rebounds. Now, I believe that we're getting ready for a crisis on a global scale. You look at all the events overseas, all the conflicts, you start to look at all these different economies, and every single one of them is in a very dangerous position. Every single one of them looks extremely unstable, and I've never before seen anything like this in history. In history, you have 4 different conflicts going on, or 4 different countries with conflicts. You have all of these other countries that saw that crisis yesterday. You're seeing all of this change all at the same exact time. There is just no way that you put all this change together and we have a soft landing. I think what we're going to start to see here is sky-high inflation, massive job losses, and major change for all of us. I mean, look at Dell. Let's look at the last, call it 48 hours. You have Dell. They say, you know what, we're cutting 12,500 employees. Then Nissan today says, let's offer buyouts to salaried workers in U.S. business, as U.S. business slides, right? Buyout packages were offered to salaried employees at least 52 years old in certain non-manufacturing business units, and to those 55 and up in manufacturing organizations. Then today, you have Bayer. Transformation gathers steam as job cut totals reach 3,200 this year. Then you have Infineon to cut 1,400 jobs globally as tech industry layoff continues. That came out yesterday. Then you have more layoffs ahead for freight-related businesses. And all these companies are cutting 1,234 workers. Came out yesterday. Buca di Beppo, a famous Italian restaurant, they are filing bankruptcy, right? They file bankruptcy, Chapter 11. When did this come out? Well, the answer is it came out today, right? 11:06 a.m., about an hour ago. Then you have SunPower. They also filed for bankruptcy. This came out today. Their stock drops more than 30%. So all these companies are going through this major change. The world's going through a major change, right? And then you just look at how fast this change is coming. Big Lots, they estimate they're going to close between 35 and 40 stores. Sounds like a lot, right? This came out July 24th, according to Business Insider. The real number goes from 35 to 40 stores to now they're closing 300 stores. 300 stores. Macy's, Conn's, Rite Aid, Express, Foot Locker, CVS, Family Dollar, all closing a lot of stores. Now, these stores, they say CVS closing 300, Family Dollar 600, and Rite Aid 77. Look, these stores are closing a lot more than that because retail is getting hit left, right, and center in a lot of cities all throughout America. Theft is out of control. The cost of goods out of control. Consumers are buying more online, and these stores they're going out of business, right? These stores are in really, really, really big trouble. And so this also just came out. Starting tomorrow, the U.S. will start a $30 billion per month Treasury buyback. Money printer, go burr, right? So you have to ask yourself, are we in a normal, healthy economy, or are we getting ready for a crisis, a real crisis? Because the last few years, it's always buy the dip. Next day, everything's great. Next day, everything's great. Buy the dip, buy the dip. That's what everyone's trained to do, buy the dip. But when you have Warren Buffett, he's putting $234 billion in U.S. T-bills. Why would he be doing that? Well, because he knows the Treasury, they'll just print money. They'll pay him out. Buying stocks, buying companies, buying, other assets right now might offer more risk versus if he buys T-bills and he gets a 5% return or whatever return he gets. With that type of money, he might have some type of special deal. You just never know. But with that type of money, things crash. He's going to be able to go up there and buy out America, right? You have him doing that. Then you have Intel. They're also, today, launch a $50 billion Treasury buyback program starting with $8.5 billion in August, $31.5 billion in September, and $10 billion in October, right? So you have Buffett and Intel, buying $300+ billion worth of T-bills. It's interesting, right? Goldman Sachs raises their U.S. recession odds to 25% from 15%. Look, I think if you went and you walked the streets of Miami, you went in Minneapolis, you went in any city, any state, you just talked to 10 people on the street, you said, when do you think a recession is? Do you think it's now? We're in one now, or it's going to be in the next 6 months? I think more people would say we're in a recession now than in the next 6 months. Because a lot of people, consumers, real everyday Americans, are feeling the pinch. The job market is changing. Everything is changing. The cost of living is out of control. And the only people really living well are the people that are, with a great company or they're self-employed and the business does well. And they don't have much consumer debt and they can navigate and pivot through the hard times, right? Those would be the select people that would say that. And that's probably 10% or 15% of the population, if that, right? It's not everybody. Now, what has happened yesterday, though, was this conversation that we're going to see this emergency rate cut and that this would be so amazing and everything would be great with this. Now, they said that traders bet on Fed emergency rate cut, but officials need more to react. Think about what that means. They need more to react. You had 4 countries basically crash inside of one day or half a day rather, and that wasn't enough to react. What would be enough to react? What would be enough? Would it be a Bank of America going down? Would it be a major financial crisis? Would that be enough? I don't know. I don't think we're going to see a rate cut in September. And I know a lot of people are saying we're going to. They say the odds are 90%. But every meeting leading up to it, they say the odds are going to be 70%, 60%, 80%. And then what happens? No rate cut. They hold it at 0. No changes. Now, I believe, and I've said this since 2022, and I've really laid into this all last year, that I don't see rate cuts coming for a few years. And I think that's probably going to be Q1 of 2025, maybe Q2. Maybe after the elections, maybe we see some type of rate cut around that period. But even then, that's not going to change consumers. Consumers are in a worse place now than they've ever been. Look at their credit card debt. Look at their defaults on their loans, auto loans, student loans. I mean, you start to look at this, number was like 40% of Americans weren't paying student loans. Like, people are tapped out. What do you think a 1% reduction on a mortgage rate will do for most Americans now? Not much. Not much. They've already actually cut mortgage rates. Rates have fallen dramatically. Home buyers aren't there because it's cheaper to rent. In an affordability crisis, people do what they have to do to survive, to feed themselves. And so people aren't going to go spend $1,500 to $2,000 renting and then go buy a house for $4,000 or $3,500 a month. They would prefer just to stay where they are until their situation improves. But the big question is, are we walking into a situation that improves for most people, or a situation that's just going to improve for the top 5 or 10%? I believe it's going to be the situation that's going to improve for the top 5 or 10%. And that's why I believe it's so important to utilize the next couple of years to make very smart decisions. Look, I'm telling you this information because I want people to do really, really well. And I want people to see things for how they really are, not how they tell us to see. Like, look, they say that automation will replace 30% of jobs in the next 5.5 years. In 1929, the unemployment rate was around 28, 29%. So they're saying 30% will be replaced. But you have to think about all the other industries that will be disrupted, in response to this. Consumers across the board, we're going to start seeing just massive change. McKinsey was saying the number is going to be closer to, 400 to 800 million individuals could be displaced by automation in the next 5.5 years, right? That was 2017, before everything happened in 2020. So you start to think about the amount of change unfolding. If the Dow has doubled in the last 5 years, and home values have doubled, since 2007, nearly. It was about $240,000 for a house then. Now in many markets it's $400,000, $500,000. If all these assets have essentially doubled, and you start seeing these massive layoffs unfolding, how do people not sell to survive? Right? How do they not? Right? What do you think about this entire situation? Where do you see all this going? I believe that, Buffett and Intel and these companies, they know what's going on. Look at the Magnificent Seven. You look at the Tesla, the Amazon, the Apples, the Microsofts of the world. You start looking at these companies. What are they all doing? The CEOs are liquidating stocks at the height of the market. They're firing tens of thousands of employees. They're reducing costs dramatically, right? They're changing their businesses in many cases. They're entering new spaces, right? They're trying to adapt to a changing world because everything that we once knew is now changing. What do you think about this entire situation? Let's have a conversation about this below. And if you'd like to fix your credit to position yourself for funding, maybe to buy a business, to get funding for your business, to invest in distressed real estate, we'd love to help you at my company, greatcreditfast.com. That's greatcreditfast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in your credit report, go to greatcreditfast.com. Click the link in the description just below this video. Schedule a free call for tomorrow. And don't forget to check out our reviews on Trustpilot. Catch you next video.